Hi everyone, it's Violet with Showhouse Chicago at Keller Williams Momentum, and I am here with Sergio Giangrande with Preferred Rate. Hey Sergio, how are you?
I'm doing well, Violet. Thank you for having me.
And I wanted to bring Sergio on today because there's some changes in mortgages and changes that are really favorable to the consumer and to potential buyers. And so I wanted to have you on today, Sergio, because there's just a lot going on in today's market and there's a lot of momentum and a lot of movement. So for anybody that's looking to take advantage of these amazing low rates, which I'm sure you'll mention, right? Now's the time. So Sergio, tell us, let's start with loan limits
Okay.
because there's been a change and it's a change that's favorable to the buyer because the loan limits have increased. So tell us about
Correct.
conventional and FHA loan
Yeah.
limits.
So both FHA and conventional loan limits both increased in 2021. So a conventional loan limit has now increased to 548, $250 for the loan amount. So let's say if you're purchasing a home for 600,000, obviously you wanted to purchase with putting 10% down, that is now doable, to where it was a little bit harder in previous times because now that was a jumbo loan. Now you become a conventional loan, and that allows more people to get into properties that they prefer to be in with less restrictions. So conventional has more favorable guidelines than jumbo does. So this helps consumers possibly purchase their home that they want with less down, or maybe, for example, there might only be 1 year tax returns, to where on jumbo they might need 2 year tax returns. These are just one of a couple of multiple reasons why now this helps the consumer on the conventional end.
And then just to show the difference, what was the loan limit for conventional loans before this change?
510, 400, and prior to that, the year before, it was 484, and before that it was 417 for a long period of time. So in a short period of years, they've come a long way from 417 to 548. So they made some increases throughout the years, and this is very favorable to a lot of individuals who are looking to purchase in that price range.
Okay, and then let's talk about FHA.
Yep, FHA is also increased, and they're now, so FHA is a little bit different. So conventional is straight the same across the board, except high cost areas. For example, like California, those are high cost areas, to where those go up even higher for conventional. FHA is a little bit different. They go based off of each county. So each county for FHA is higher, okay, or lower, I should say. But for Cook County, DuPage, our main surrounding areas in the Chicagoland area, the 1 unit went up to 379,500. A 2 units, 485. A lot of people don't know this, that the loan limits change based on the amount of units. So if you have a 1 unit, it's 379 on FHA, 485 on a 2 unit, 587, 250 on a 3 unit. It goes to a 4 unit, which is 729, 800. Now, if you're purchasing a 4 unit property and this is your primary residence, you can purchase a $700 and something thousand home with only 3.5% down on FHA. That is pretty impressive.
So for the people watching, what is the main difference between conventional financing and FHA financing?
Okay, so one of the main things is on a multi-unit property is that conventional, you have to have anywhere from 15 to 20% down on a multi-unit property.
Mm-hmm.
On an FHA, you can still get away with 3.5% down.
And it has to be your primary residence.
FHA always has to be a primary residence.
That's right.
Where conventional, you can do investment properties for an adjustment to the rate. And when you look at guidelines, there's different guidelines. There's different restrictions between FHA. Sometimes FHA has more favorable guidelines compared to conventional. I could sit here and go through guidelines between the two for hours, but the main thing is more favorable on the FHA, and it doesn't have as many restrictions with, for example, debt to income ratio or lower credit scores. Now, if you don't need that more favorable guideline and you fit the conventional is most likely going to be a better fit.
And so I always tell my buyers that sometimes the FHA path is your stepping stone into homeownership, for example, right?
Absolutely, because if you're going to FHA with a 3.5% down and you're planning on being there for a long term, that PMI stays with you for the life of the loan. So you're definitely going to want it to be a stepping stone, and it could either get you into a home and then Violet can sell you a home, sell your home and purchase a new one when you're ready to step up, or we could always refinance you out of that into a conventional loan if this is going to be a long-term property.
Awesome. So basically anybody that would like to be active in today's real estate market and purchase could talk to you about where they fit in best and in terms of their financial situation.
Absolutely. I'd be
And
more than happy to help.
These, definitely these new loan limits help the consumer in so many ways. So before we go, two more things really quickly.
Okay.
Let's talk about the amazing interest rates that we have right now. What are you seeing? What are you seeing on average people getting right now?
Yes. So we're obviously seeing all-time lows, and it depends on the scenarios. Rates adjust between purchases and refinances, between credit scores, between types of properties. But we've seen a lot of stuff in the high twos on a 30-year fixed and low twos on the 15-year fixed. So we've seen some all-time lows.
All right. And then finally, what I wanted to just ask, because I'm getting a lot of these kinds of questions from today's buyers that I'm working with. In terms of financing programs that are out there, we talked about conventional, which is typically your standard 20% down, right? You've got to have your 20% down in order to avoid the PMI, which is private mortgage insurance. Is there something out there where you can put a little less than 20% down and not have to pay PMI?
Yes. So you have the ability at 5, 10, or 15% down to avoid PMI. What you would do is just buy it out. So we can buy out a one time. There's different options that you can do to receive no PMI. PMI has come a long way as well, Violet. A lot of consumers shouldn't be scared of PMI, especially if you have a great credit score, because PMI in today's day is not as expensive as it used to be. If you're putting 5, 10, 15% down and your score is great, that PMI factor is very small. So obviously, if it's not me and whoever your lender is, hopefully it is me, but have them look at the options before you buy it out and avoid the PMI compared to having it on your monthly. But yes, to answer your question, there is that option to where you can purchase out of the PMI.
Okay, great. So thank you so much for jumping on today. We kind of did this impromptu, and I wanted to get the message out there because there are a lot of changes and there's so much going on with, with the market. And so we'll get everybody to, come together. I'll streamline that process for them on the buy-in and the sale end, and you'll do it on the financing end, and everybody will get into their forever homes and it'll be great, right?
Sounds like a plan. I'll be more than happy to help.
All right, Sergio, thank you so much. We'll talk to you soon.
Thank you, Violet. Stay safe.
You too.